Live from Music City, Nashville, Tennessee. This is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of the Afternoon Swing Trading Floor with your humble host, Jeremy Alexander, with another daily dose of mentally delicious brain food to make you live life, and trade it. What's going on, folks, from around the world? Woo! Oh, man. Oh, man. All right. I got a poll open. Excited to see what you guys think about this poll. I know what I think about it, but wow. The market, there's no place like this. There is no place like the stock market. I mean, what would happen if real estate markets went up 10% and down 10% in a month? I mean, what would people do? So let me close this poll in 5, 4, 3, 2, 1. Ending the poll. Sharing the results. There we go. So again, 69%. You guys are good. 3%, 10% crushed it today, and 21% people are panicking. What should I do? All right, that's fair. I get it. This one's a little bit weirder than the last one for sure. But we're gonna talk through it. We're gonna chat about it. But there's definitely a lot to talk about today. It was epic, pretty epic day. Wild stuff. Everything happening for swing traders, day traders, long-term traders. Don says he bought some stuff for his long-term. Right on, man. So I will send out, bottom line is what I will do is for those watching this recording, I'm going to send out this recording of today's video as well as another recording that answers the question, what should I do? I will send it out to everyone this afternoon. Bottom line, it's just all about perspective, guys. All about perspective. Talk a little bit about Warren Buffett and how much his portfolio is down over the past month and a half. Talk about the systems, the approach, the strategies. So we send out that later. But bottom line, guys, let's be quick, let's be nimble, let's be fast, and let's attack what's here in front of us. Here's the deal. There's a lot of black candles in a row. Obviously, we got stopped out from this call option. The unfortunate part about this call option, it was either going to be a gap up or a gap down of this size, and I really did not know which one. With the FOMC and stuff like that, I mean, you can't blame anything on them because they all knew they were going to increase interest rates, and that was either going to be a good thing or a bad thing or was really irrelevant. But obviously, with this kind of gap down this morning, lost 2 hours at open on those calls. And the ironic part was I still gave us some flex room in that situation because when I was originally doing the stop, I was thinking about putting a stop at 195, which means that we would have bought more options, which means we would have lost like 3 hours this morning. So I actually gave us a little bit of flex room. Having the stop at 155 just controlled how much risk was on the table. And that option opened up this morning. The challenge / opportunity of this gap. So let me just hop over to Slack because this morning, I mean, I hadn't got out of bed yet, and I just knew that this gap was going to be just savage. So let me hop over here. Give me like 14 seconds. All right. So 8:04 a.m. I mentioned 99% chance we get stopped out in SPY calls. I'll regroup looking for something out. This gap, especially on the QQQ, looks decently bearish for a few days. Let's make back that R day trading today. So that's pretty much my analysis, just really early in the morning. I mean, the gap on the Qs, the gap on the SPY, if you hop over to the Qs, I mean, look at this gap, guys. Marios said it yesterday, and my boy over there from Cyprus is asking if this is a bear flag. And I guess the answer is yeah. I guess that's a bear flag. Because you had some high wave volume here, a high wave candle, you had a lower shadow. So this was a retest gap on pretty much most of the indices. Here's the 5-minute chart. And it retested like a pro. So this was, and we did very well in the day trading room. Blake just absolutely mastered it. So let me do that. Thank you, Rick. Appreciate that, man. So the Qs, we have the Qs here. I mean, here's some support right there. And that was really based from this candle, and then this candle. And then, of course, I mean, if you just played simply the low of the day, here's the pre-market low, right there. If you shorted that on a pullback, boop, even just this move right here gave you an R or something. And then later in the day, this was when the tariffs were announced. It was like right here. and it caused the market to dip a little bit. And it was that time where I was mentioning to everyone, I was like, be very, very careful getting in bearish here, because obviously the market had already sold off massively. And I'll look at the SPY in just a second. But that was a place I almost pulled a trigger on a bearish day trade, because I really did feel like we were going to have a little bit of a continuation lower, but that would have been a massive trap. And I'm going to go look at that stock in just a second, meaning I would have lost some money. But anyway, if I hop back over to the SPY, so here's the SPY, and the SPY never made a new high of the day. So again, this was that announcement right here. So we had this big bullish candle right there. And when that got taken out, there was a lot of things in the market that set up to go bearish, and I was just really waiting, because that would have literally got triggered in, got stopped out, and then it would have rolled over. Whew, man, that would have been ugly. So the one that I was looking at was eBay, EBAY, and I will talk about some day trades as well and just some stuff that we did. But here was the setup. I was going to short here with a stop right there, and that is just savage for the market to do something like that. Just making sure that here's some bears here trapped, here's some bulls that are trapped, everyone's trapped, and then it actually makes this move. It's kind of wild. It's really strange, but if you think about it, I was talking about earlier today, I mentioned type in a 1, and you guys are welcome to do this as well. Type in a 1 if you now know how it feels to be trapped, as some of the day traders that I always talk about. And that feeling you can use to get really, really good at your day trading and or some swing trades as well. Because if you can look at these charts and you can see the gap and you can go back and go, you know what? If I was in this trade, this is what I would have done, and if this is where, and so on and so forth. It really can help massively. So meaning we bought here, so we know we got in, hoping it was going to bounce. It obviously didn't. So that was number 1, right? That was the first place I was trying to buy this dip. I guess number 2 is going to be down here somewhere. So between now and then, let's see if we can short. So going to flip a little bit, because that gap, that volume, I mean, there's definitely some people trapped. Here's the hourly chart. Michael says, I need to start taking advantage of some of the day trades. Yes, correct. But is there a lesson where I can get the nomenclature used in Slack for day trades? Yeah, absolutely. Just, I mean, really any, it's the same exact nomenclature. So, if we type in a stock, the first number is the entry, 123, for example, and then the second number is always the stop. So as far as nomenclature, that's really it. All right, if you have limit sell, stop limit, those are all just broker orders for how you're getting into the trade. So yeah, the first number is always the entry, and the second number is always the stop. We also try to do our best to at least post some charts, but it's the exact same way for swings. I mean, here was the setup that Blake posted. So ABBV 101.41 by 104.70. He also posted the chart, and this was short entry 101.41 and stop, which is 104.66. And yeah, I mean, that was just a wrecking ball. That thing was like a 3R trade. Really, really good setup. So there's some great gaps out there. But yes, here is, and I mentioned this in another video, but I'll go ahead and write it down now because we have plenty of time together. Why not? And this is good, bad, or indifferent. This is just how I see it right now. And this is just me personally. Back over here sometime. I'm trying to find out where this was. Back over here, I mentioned until May 1st, this market's still going to be very wild, very volatile, and very choppy. So just kind of try to live through it if you can. But for the foreseeable future, and we'll talk more about it in just a second, but these are probably the top 3 or 4 ways you want to approach this market. Number 1, day trading. Like Michael was saying, I mean, I will teach you all you need to know about day trading through our videos. If you want to start learning how to day trade, this is going to be a good market probably for a while for day trading. Now, how will I know if it's no longer a good market for day trading? The cool part is most markets are good for day trading, right? There's a lot of pros and cons. You have One of the biggest cons is you're in cash all the time, or the vast majority of the time, even though I also do swing trades. You have a lot of cash stockpiled and you are taking advantage of it. You can make moves every day. So, right, you're just purely in cash. So this is going to be a really good market for day trading for a bit longer from here. There's a lot of volatility, a lot of range in the day, a lot of movement. Number 2 is option selling. So option selling, spreads, condors, naked puts, calls, probably really going to be those take. I mean, more or less, I would say taking advantage of volatility is really how you would do that. Number 3 is just you're just stay long term. So it's always good to have long-term investments. And I talk about this in the other video that I'll send you. But bottom line, what you want to do is, just because something is happening, your long-term approach, you have Warren Buffett, who, again, we posted his portfolio, was down since this day over in February, like $63 billion or something like that. So if you're not down $63 billion, you're doing pretty good. And again, that's about 10% of his account from what's happening right now, 10% of that portfolio, which is about $600 billion portfolio. He's down $63 billion. Now, that's nothing to scoff at, being down 10%, but that's, again, one of the most heralded investors of all time in the world. Granted, he's high, so if you have a 10% pullback on a number that you're already massively positive, it really doesn't matter that much, but the numbers are still the same. So if you're long-term, just because you're experiencing momentum like this, you shouldn't start just totally shifting your long-term perspective, because long-term perspective over time works. It's just the way it is. You can always help with timing. But what I also want to do, so that really was the list, those 3 things. I mean, again, stay long-term. Don't let your long-term investing protocols just go out the window. If you were younger, then I think I keep using the term like 59. Yeah, if you're younger than about that, you got plenty of time to survive this. So don't even think about it. Don't even worry about it. Here's the month. Let me go to a monthly chart. And we've talked about this before, but let's just bring it up again. So this is a monthly chart on the SPY. Here we go. So monthly chart. Now, during this market, 2012 to 2015, that market, day trading was pretty good. No denying that. It wasn't bad by any stretch of the imagination. But what type of market was that very good in? Swing trading. Swing trading was incredible. You couldn't have lost money, really. Swing trading, put sales was also good. They're usually always pretty good in bull markets. So put sales, which is option selling, but you're not doing call sales. You're not doing covered calls. You're not doing iron condors for sure. You're just going bullish. So swing trading, put sales, and again, day trading was okay. I would put day trading probably the 3rd of that list. There was a lot of that time where I kept telling people, man, swing trading is paying for my day trading habit kind of thing at some portion. Again, I'm by no means the best trader here. However, everything started to shift a little bit over in this area. And how would I know? Well, you didn't know. No one knew eventually until it happened. You don't know until it occurred. You can look at the chart and go, guys, something's coming, some kind of volatility. We can't just do this forever. I mean, it's impossible. So you have the volatility, you have the crazy movements, you have this wild, just, woo, what the heck's going on kind of stuff. And you don't know that until it occurs. So I really want you to boil that down into your brain, because you will not know until it happens. No one can pick the top. So when that starts happening, day trading was berserkers for from 2015 to pretty much the end of 2000s, almost 2017 when Trump got elected. So right around here, day trading was phenomenal. Swing trading was pretty difficult, but still doable, but challenging. Put sales still worked out very well. Credit spreads and iron condors still worked out very well. And again, your long-term perspective, if you bailed out of the market in 2016 because there was too much volatility, you just got absolutely wrecked. right? So that's pretty much the SPY. And then again, during this move right here, where this occurred, what happened again? Flipped back to, again, swing trading was fantastic. Put sales did really good. Day trading was okay, subpar, decent. So as I'm saying, yeah, we're coming into another time for day trading. We're going to come into a time where day trading is incredible. One trader said, that's all well and good, but my JPM and Apple long-term shares have brought me below the $25,000 day trading requirement. That's okay, man. Money is the easiest thing to come by. You can always put more money into the account. That's simple. It's just money. I know the feeling, man. Go increase your value, and you will go increase your money. It is a 100% correlative effect. Money is definitely available, so just go get you some. It's everywhere you want it to be. And just add it to it. And then plus there's other ways to day trade, right? Just because you don't have 25,000, you can still day trade 2 or 3 times every other day. Like I said, Monday, Friday, Wednesday, Tuesdays, Thursdays, and do that until you get your day trading account back above 25 and you're in the green, right? So anyway, yeah, we're going to come back into a really nice time for day trading. I mean, day trading is always fun, but this is probably a 1, 2, 3, 4, 5 wave that someone's mentioning earlier. This is going to be some type of corrective wave. Would make tons of sense to me, like some type of ABC. It also, you know, if it's a corrective wave, it's either a 4 or some ugly, ugly correction. A, B, C, or X, Y, Z, or something like that. That's possible. Very, very possible. And it would make sense. Because again, folks, if we're just looking at this part was easy. The easier and easier the market gets, the more you should be aware that there's something around the corner, especially if you look at the chart and you can see that, yeah, there's going to be a lot of volatility coming. So again, day trading, have an absolute blast. We're going to have an absolute blast together. I'll teach you anything you need to know about day trading. It's really not that difficult. It's totally doable. And, you know, just be patient. And for my younger traders, if you're under the age of 50, don't even stress about it. This is just a market condition. This is a market cycle. Again, even if the SPY comes all the way back to 212, I mean, shoot, it could come all the way back to 158 and it'd still be healthy. Just buying opportunities. You got to just wait it out. Find other ways to increase your money. All right? Trading should not be about just purely making money. Trading should be about making money off of your money. But acquiring the skills, acquiring the knowledge, acquiring the propensity to have an advantageous path to know where you're going to do, what you're going to do it, why you're going to do it, and having those multiple tool sets. Because yes, the market does reward the specialist. Absolutely. So you can make money day trading every single month on average. It can absolutely happen. But there will be months like December. Guys, I think in December I made 1 R. Now granted, there was a lot of vacations and a lot of travel, but it wasn't a lot, right? 1 R. So the question you have to answer is, would you still be trading if you had endless amounts of money? And if the answer is yes, then cool. Then keep trading and learn stuff. But you can't sweat the downs. If you enjoy the ups, you got to be ready for the downs. Simple as that. Because again, I know I keep bringing up the guy's name, but I've read everything he's ever put out. Warren Buffett was in the market this entire time. Okay, the whole time he was in the markets, just growing and growing and growing. Didn't lose a lot here, right? Didn't bet the farm. So yeah, you know. And anyway, just going through all that. I mean, that's something you got to keep in mind. Markets are structured to go higher. This is a great move. I like it. It's going to be volatile. Where are we going from here? So let me go back to the SPY. I think at this point, we really could keep eyes on some puts or just very short term, because this gap today was pretty gnarly. And we do have one bearish trade out there, which is certainly helping a little bit in the sea of red. It was one night in shining armor. The puts are going to be pretty expensive because of implied volatility. But if we're looking at like a 265 put, let me come back over here, give me about 13 seconds. And yeah, we're probably going to go a little bit long today. So on SPY, if we come in here to the hourly chart, So again, this may or may not trigger, but I think all of you now, there's none of you here shouldn't have any problem not knowing how to trade bearish. I think you all know that. SPY, so that'd probably be about $4 on the option. So this would be an April 20th, 2018, 265 put at $4 limit buy with a stop at 3. I mean, would do it. Yeah, $3. So if we retrace enough and we snag some options, again, great. And if we don't, we could easily continue. We probably do gap down tomorrow. It'll be interesting to see exactly how we play out. But the funny part is, even if someone were just day trading full time, that's all they were doing, just day trading, there's still times where you're like, is this the there's still ways that you can mess up trades, right? I mean, there's no perfect strategy. There's no perfect answer. It's just all part of the game. It's all part of the game. It's like if you were in real estate, I mean, there's real estate crashes. If you were a business mogul, there's tariffs and taxes and, you know, employee theft and all kinds of stuff. I mean, long hours and hard work. It's just, what is it in life that you want to do that makes you happy, and then go do that. Neil says, I've never traded bearish. I'm scared to make the first step. Don't be scared. It's all good. It is all good. Martha says, looking under the surface, sector rotation, there's still no indication of turnings into a bear market. Weekly, monthly chart, still in an uptrend. Yeah. And usually by the time that we are in bear markets, it's hard to see, you know, you're like, oh, you can go back in hindsight and go, yeah, that was when the bear market started. But I still think this is just a nice, healthy, needed correction and a nice looking trend. So, and again, Mila, if you don't want to go bearish, like I meant, that is totally fine. This is obviously going to be just a really quick trade, super fast, $3 stop. It's a good setup based on a retest gap. And I just want to have, and what interestingly happens, we'll probably at some point have multiple positions where I'm in some calls and some spreads. Yeah, but put your little pinky toe in the water. Put that pinky toe in. If you got a margin account, that's all you need as far as brokers are concerned to short something. But yeah, use a small R, have your stops in place, short one share. I mean, what's the worst that's going to happen if you shorted a share? Right? You know, so just short one. Plenty of ways to tiptoe into it. Yeah. So yeah, you spend $4 in commission, $5 in commission, $10, and then you just get an idea. You can do it virtually, all kinds of ways. But it is not as scary as you think, promise you. It is real simple. It feels good to make money when the market's going down. Makes you feel real toasty inside, like you know something everyone else doesn't. So at the SPY, we probably do make it to the 200, which, again, for my option fans, I honestly couldn't be even happy. I could not be more happy about this move because I'm still in an iron condor. And my iron condor is far away. So 239, 238. So we get back down here, option sellers, you know, if we do, which I think we do, into the 250s, you know, 258, 259, you know, if we get back down there at some point. And this really needs to trigger. If this doesn't trigger tomorrow, I'll adjust it and we'll kind of figure out what else we can do. But if we get back down here for my option selling fans, prepare to start loading up for some 240s, 230s, maybe even May, something like that, because that is, at that point in time, that's almost comically far. I mean, we get down to 240. The 100 simple on a weekly is at 237. I mean, we get down there. That is the market correction that everyone wanted. That would be 30%. 285 to 230, so that's 50 points. Yeah, 20-ish percent. I mean, that is massive. Which it could happen. I'm not saying it can't, guys. When the market starts stretching its legs, bears can run. But here's your lower highs. If we get something like this, I just think we don't. I think we kind of hang out here and do something like that. Eventually go higher, but that interaction with the 100 is going to be a monster. So anyway, we'll see. I mean, April, if I'm timing it right, you never know, but a lot of perma bears are going to be calling for it, and I'm gonna try it another time. All right, this is our first time together. We tried the bounce here, didn't work. I'm gonna try number 2 down here at 258, which I don't think we're gonna get down there tomorrow, but if we do, get ready. I definitely do not think we open down there tomorrow, but if we do, I'll be buying some of the rhymes with call options. So, yeah, if we gap down there, just kind of take that in mind. Now, I know I'm doing a lot of just market review on the broader markets, but that's okay. Look at this Dow Jones gap. Woo-wee! Ladies and gentlemen. I mean, again, even if you aren't a swing trader, I mean, some of these gaps, I mean, you could see these before the market opens and have an idea that you could at least, even if you nibbled just one put just to protect something, but that gap right there.
I'm a classic gap. Look at me, no candles on the screen. I'm a classic gap.
It's so money. It is so cash money. Just a beautiful gap. I mean, right below. It couldn't have been better. Just right below the wick of that candle. So nice. And again, you got this triangle looking thing. We haven't even hit the 200 on the Dow yet. We haven't even gotten there. But here's the Dow Jones, the actual, I keep forgetting, DJI. So the Dow, the actual index today, down 724 points. So I mean, massive move. So yeah, this is a pretty decent gap down. There's a large chance we retest. There's a solid chance we go a little bit lower. Just understand, and again, if you don't want to short stock and go bearish, that's cool. You can buy something called put options. If you don't want to do that, that's fine. Just wait it out. But man, the challenge with this retest, if it works perfect, it'll be very quick, and then it'll be over. Maybe we get like a week or something. Anyway, Sanders said, what type of triangle is it? What type of triangle? I mean, there's real no name. As far as like the pattern name would just be a symmetrical triangle, which means it's same thing. You have an ascending triangle, which looks like this, and you have a descending triangle, which looks like that. So yeah, this will be a symmetrical triangle, which if it's a true move on the Dow, we should go from 238 to 264 is a 30-point move. So that brings us all the way down to 210. If this is a true symmetrical triangle, we could have a nice little sell-off here on our hands, which is entirely plausible. So I think we're going to go down a little bit farther into the 200 simple on some type of retest, and we can make some good money doing that. So these retest gaps, they are indeed retest gaps. Yep. The Qs, the stronger the ETFs, but, you know, made a new all-time high. This one, all the newbies hopped on, and they're just getting crushed. So that's the Qs, and here's the IWM. IWM, also solid gap. That was a bearish gap and go on the IWM. And again, this is a pretty strong index as well. Just trade to resistance. I feel really good about my exit. Sanders said, was it a bear flag? Yep, that's pretty much what Marios was saying yesterday. He was asking that question, are we in a bear flag? I'm like, guys, unfortunately, I won't know until tomorrow. As we talked about yesterday, that's what we discussed. It was either going to be a morning star or a flag. And I mentioned that tomorrow. So yesterday I said tomorrow's going to be a really big day, guys. Bullish or bearish. I just don't know which one yet. Luke says, I don't understand how you can make money with a condor. If you have 20% premium for one condor, it would cost me $7.2 to get in. If you unravel, even more. So I don't get it. What is the reward? And again, if the commission structure, Luke, isn't good for you, I wouldn't go about it, but pretty much the way it works on a condor is you have to get into contracts. So you have a bear call spread and a bull put spread. So let's just do some really quick math. Let's say you do 10 contracts on each. 10 contracts, so that would be $40 of commission, so $1 per contract. And on 10 contracts, so if you sold 10 of the 285, bought and sold, This is $1,000 of margin, and this is $1,000 of margin down here for both of those because it's 10 contracts per, and you have only $1 difference between the two, right? So 20-cent credit on $1,000 of margin is $200. So $200 minus $40 of commission is $160. And that's it. So yeah, if you have to unravel, you were absolutely correct. It's going to cost some money. But obviously your goal is to not unravel. Luke says, I'll pay $1.08 per contract. All right, so let's do $1.08. So 10 times $1.80 equals $18. $18 times 4 equals $72. $200 credit minus $72 equals $128 net profit if you did 10 contracts. So the reward is obviously that you get that if the stock stays below the sold option and above the sold call. And that is it. So again, just like any other strategy, right, you're gonna have to pay for commissions and things like that. But the cool part about the strategy is one of these has to work. It's impossible for both to go against you. One has to work. The market can't be both up and down at the same time. So there's no additional margin on the trade. So this is only be $1,000 of margin. Thomas says, Robinhood options, anyone? Yep, again, exactly, free options. So that's coming out. So that's going to save a lot of money in commissions. We'll see how advanced their option can get, but a lot of you are on the process, on the waiting list. So cool. Anyway, that's the SPY. You guys are asking some great questions. Still got a lot of stocks to go through. Let's roll through these pretty quick because most of these are just either us about to get stopped out, me getting stopped out, or planning on getting stopped out. Here's AAP. So Advanced Auto Parts. We did get some commissions, some dividends today. And that's that gap down. So we had a note last week that if it was not above 120, we can close for a profit. Let's do it. That was yesterday. So yesterday was the 21st. So if you did get a chance to close for a profit, congratulations. If you did not, tomorrow will be that day. So 3/22/18, look to exit AAP accordingly. If you took that particular trade. Now again, you might have gotten a whole $12 of dividends. Don's got a put sale way down there at 95, which is pretty far away. But Advanced Auto Parts, getting drugged down by most of the market. We were up very small on this position for a while. Really, even yesterday, you could have closed it out for break even or for about like a $13 profit. But a little bit of a gap down, and that's pretty much what we got on AAP. All right, next on the list is OLED. So OLED, Universal Display Corporation, this particular stock is going to go to its 100 simple as well, more than likely. So it's a little bit of a high wave candle for sure. Universal Display Company, support resistance right about here, but it was a very, very good gap. I played this gap the other day as far as a day trade, and so this was a gap and go. So it actually did retest, but it gapped down this morning as well. So I'm not saying it will hit the 100, but there's just a pretty good chance. It paid dividends. It gaps down. Here's the hourly. I mean, realistically, anything could double bottom tomorrow, but OLED, I probably will put this on my list for tomorrow morning. I'm in the room all day tomorrow morning. Move this over here. It just looks a little on the weak side. Short term. A little on the weak short term side. All right, Friday morning. OLED. Matt says they're not good for spreads, though. Robinhood, probably not. Not yet, at least. They'll get better. They will get better if you give them time to grow. Okay. So here's the daily chart. So Universal Display Corporation, again, very nice gap. It did retest a little bit. Looks a little on the weak side. OLED looking forward to continue lower. Now, our one positive note in all of this, General Motors. And I've been looking for some bearish setups. I just haven't really seen that many. That's the crazy part, is a lot of these gaps are just happening overnight. A lot of these moves are in futures. So my future traders are having a blast, which is one thing that I left out of that. One thing I left out of that list was future traders, but we had a great course on it. I don't personally trade futures only because then I would never leave the room. So I probably could. But anyway, you guys are welcome to hop into the futures chat for anyone who trades futures. I mean, that is, I already have one 24/7 market, which is cryptos that I trade. So just can't be in everything. It's not a big deal. But yeah, futures are going to have plenty of opportunities to make some coinage, right, James? All this volatility, all of the hop overnight. I mean, it's going to be legendary. But anyway, GM, we actually got triggered in and hit our target first for 1/8 of our position 2 days ago. So as of now, the 100 simple moving average is going to be our target on this one. This is at 35.92. So let's just make it an even 35.97. And what I will do is also lower the stop on that. And I'm going to put that stop above the high of the day so that we shouldn't be able to lose on this trade unless something just weird happens. So this was shorting shares. And it's the only swing trade I think I've made money on in March. Something crazy. I'm pretty sure that's the case. Because I've just had a lot of bullish trades other than PayPal. It just, has not really done much. So it's been tough, guys. It's been difficult. Again, you go back and you look at some of the titans of the industry who are losing billions today. It doesn't feel that bad if you lost $1,000. You're like, wow, I only lost 1,000. Warren Buffett's down $60 billion. It's all relative. Day's not that bad. But anyway, General Motors, lower the stop. Maybe we can get a target. Winning swing trade. Engage on General Motors. Target to exit all. To exit all will be right there. And make sure I put that in Slack. Just updated swing trade. On GM. Okay, so that's what we got there. Next on the list is AutoZone, ticker symbol AZO. And AutoZone was another one that I've been working on, seeing if we're going to get into some bearish trades on. And it still looks pretty fresh. Big challenges. I think it did make a new low. The low of this white candle is 64.33. The low of this candle is 643.22, 642.65. So we did go lower. This stock is pretty spready. I don't think the risk reward is amazing on this trade. I'd like it to get a little bit better. I think I could make it better by doing something like this, and then it'll get a little better. James says, worry is a misuse of the imagination. I like that. It's a good quote. Man, how funny would that be if I start popping to a bunch of bearish trades and then the market pops bullish and I get stopped out on those too? I mean, I've never done that before. That's sarcasm. All right, Javier, love you, buddy. Take care. So this will be a limit sell on AutoZone. Pretty much just right at that support. Let me put the line chart on. Robert says Trump could take the tariffs back off like he'd lessen the steel and aluminum ones. Yeah, that's definitely possible. Random tariffs announcements. I feel like we could lose less than R on this trade because I'd be in this. This would really need to trigger tomorrow. And then I'd lower the stop here. I'm just going to wait. I got another trade that I like a little bit better. I'm just going to wait on AutoZone. We're in GM, so if GM goes down, we'll make a little bit of money. I'm not going to take it. Neil says he promised it was just the beginning today. Oh, man, we'll see. Roku. So Roku did not short Roku today. Mark exited Roku brilliantly. The reason I'm not taking Roku is this extension. Right, very nicely extended from that 10. You'll see how it never really interacted with the 10. It got close, but just didn't quite get there. I'm going to keep waiting on Roku. I said 2 to 3 more days of sideways movement. We didn't really get that. So let me see if Roku can have a pullback of some sort. I like this bearish, but maybe we get something like this. Trend looks good. Trend looks weak. Let's see if we can short some type of pullback. So I'm not a huge fan of the bullish move right now in Roku. I think we do go a little bit lower. You had a phenomenal earnings gap. You had 2 crazy earnings gap. You had this one where Roku made a bunch of money, and then you had this one, they lost a bunch of money. I was like, that's weird. Oh, Tim, you're a legend, man. All right, so here's MDB, Mongo database. MongoDB. We've been keeping an eye on it. It's a nice trend. It really didn't get pummeled that much by the market today, which is a good sign, I feel like. Let's get a little bit more of a pullback on Mongo. I'll put it on the list for next week, maybe buy it off the 20. But the planning has begun. VMware, ticker symbol VMW. I mean, really quite interestingly sideways. James says, I promise to never promise again. I promise. This is an interesting gap, an evening star reversal on VMware. I'm really not afraid to go bearish on some things. If the symbols are showing up, this one looks pretty good. I think we can get some decent risk reward on this one too. That would be $6. Wowzers. So those are going sideways as can be. We're below the 100. Weekly chart, below the 20. Challenges, that's like a 1 to 1.5. I think we could lose less than R on VMW. Limit sell. And here's the 100. So again, just broke the 100. I wonder how much this gap will fill, actually. Let me go back into the hourly. I wonder if that thing will fill all the way. I don't need to take this trade. So if I don't need it, what I mean by that is, obviously the market's super volatile. There's things happening all over the place. I might as well put it up nice, a little bit higher. 123 by 128. $71. Might as well make that 129. Just make it an even $6 of risk. Okay, because I do like that setup. I think some people bought right here on a breakout. This is a little bit of a gap down. A lot of white candles here for it to fill. 123 by 129. I feel like we could lose less than R on that trade. And we need some bears in our lives for just the very short preceding future. 123 by 129. Okay. That's VMW. New official swing trade. Also have something on SPY. Yeah, Fabian, you're absolutely correct. The challenge is, I think I can write in bearish. There you go. I have to do that with options because I'm bullish on the option, right? That's what it's reading. It's reading that you want the option to go up, but it is bearish. I'll probably just write that in there to not confuse people. Okay, we're doing pretty good. We're going to go a little bit long today, but not too bad. I think I have Nike on my list. Yep, I'll be looking at Nike in just a little bit. FedEx, wow. So FedEx did not gap at all and just got absolutely hammered. Robert's on the bear swings in and out pretty quick because of volatility. Yep. Yes, sir. So FedEx, I don't have anything on it for now until we get a little bit lower, probably around here. So that's a solid gap down. It is as a support, but I think there's a lot of people trapped right here. This is a really good retest gap. Again, I'm not saying the market gaps down hugely tomorrow. It probably won't, but if it does, right, we just have a gnarly market on the morning tomorrow. I think it's probably an obvious buying spot. I don't think FedEx gaps down per se, but an open around 227. For anyone who's looking at trading it, that's where you would want to trade it. Wayfair, getting wrecked. Wayfair. Whew. Let's wait on Wayfair a bit. Again, if you're looking at playing that one bullish, I like it a lot at 55.80. Now, for my aggressive traders, and you know who you are, like you, Michael, you beautiful human, got some really good support right there, and we did bounce before. So again, if you requested Wayfair and you can stomach the risk, all right, there's some people who can, there's some people who can't. There's that support. It can easily bounce there again. It feels like the stupidest thing in the world to buy when all the market doing is selling, but that's usually the exact opposite way to think. So anyway, let's call them the red traders. They made their money once. They're going to try it again at the exact same price. But again, just a very aggressive trade. Brian says stop at the high of today's candle. Stop at the high. On W, if you're going bullish, actually it looks like we're down pre-market a little bit already. So Wayfair, Wayfair, if it gaps down, you'd really just be looking for other supports. Because again, Wayfair, you probably are looking to go bullish, believe it or not, very, very short term. If you're looking at going bearish, you missed it. I would wait a little bit longer. Because you already went from 80 to 70 in a week. So the bearish rollover was up here after that retest gap. Black candle, gap down, retest, bunch of reversal patterns, very small bullish candle here, right about there. So yeah, if you're looking at going short, I would wait a little bit on Wayfair. I'm not saying you can't, but it probably retests a little bit. Brian says, I was thinking a break lower and an S curve. Yep. So if it broke down and did something like this, that could easily occur. Yeah, that could. So again, if it gaps down tomorrow, you have a lot of black candles. Wait for some of that buying to come in. Wait for that S curve. Get a day or two. I don't personally have anything on Wayfair. I'm going to wait on it. I think there's better trades out there. But again, that 100 symbol at 55.80, a good buying spot down there could be a possibility. AMRS, not affected by this market at all. Battling the 100 simple on a weekly chart. 100 simple on the weekly. So I'm going to keep waiting on this trade based on that 100 simple. We'll come back next week. This is a stock that we're going to kind of continue to keep our eyes on and see what happens from there. Tesla. So Tesla, Transportation Thursday, certainly down with the market, but really not that bad. Had a really good bullish day yesterday. There's a lot of traders that don't want it to get to 270, but 270 is a 10% drop from where it is now. Here's the weekly chart, and you got the 100 simple on a weekly at 278. I also have an iron condor on Tesla, and I will not even worry about this bull put spread. Even if it gets all the way in the spread, at that point, I think it's going to bounce out of there. So I'm willing to lose my margin on this spread if it happens. It'd be my first loss since August on a credit spread. So there's bound to get one happen. So I'd have to lose the entire margin on that. I'd still be okay. Because that was almost $1. of credit received. So anyway, Tesla, I'm just going to let it hang out, let it trade sideways. I still think if you're looking at playing it bearish with a close below this low, just make sure to do it quickly. I think Tesla could easily get down to 300. And if you're looking at going bullish on a swing trade, that's probably where. But I would be more neutrally trading Tesla at this point. Oops. RIG, for example, RIG. RIG, not much. Had a bullish day yesterday. Most energies did. Otherwise, it is flat sideways. Nothing going on RIG. If you are trying to play that breakout, again, here's the long-term moving averages. They're going to kind of hold you back a little bit. I would just wait on RIG. Unless you're in something long-term and you like the company and where its fundamentals and what it does, what it provides, what kind of value and service it gives to the world, keep holding. But that's all I see on RIG. Very, very sideways. Okay, cool. Caterpillar, so CAT stopped out some traders. So CAT, again, just a gnarly gap down. Really, really strong gap. Certainly going to be trapping some people. Frank was looking at how low Caterpillar could go. And I'll put this back in here. And with that being the case, I mean, I don't know for sure how low CAT could go. But if you're looking at picking up some shares, 120 is a pretty viable possibility. I mean, again, the interesting thing about Caterpillar is it traded very bullish. The most bullish move it's ever had. I doubt it pulls all the way back to 120. Well, 120 is doable, actually. It's only about 50% of that wave. I've seen crazier things happen, but what Caterpillar did once is, right, broke above here and then kind of bounced and then came back and then bounced. So maybe we do something like that again. Maybe that happens just a little bit bigger. I'd say that's worst case scenario, right? So if you're looking at picking up CAT, it was 166, right? In the 170s just weeks ago. Now it's at 140. I think you can get it a little bit cheaper. This is a pretty solid gap. I mean, that's an amazing bearish gap and go with a lower high and some higher lows. I don't really see how CAT doesn't go a little bit lower. I'm going to watch it tomorrow morning. If you want to buy CAT long term, that's fine. Just have your good prices at how cheap you want to get it. Neil says, could you buy puts on it? Yep. That's how you would go bearish on CAT. With a little bit of a triangle like that, again, it could retest. And the best part about trading is, of course, as you all know, one candle can change everything. If we got some type of move that did this on Caterpillar and just closed above the high of that candle, like NVIDIA, I would just take a step back and go, all right, market, you obviously know something I don't. I'm just going to go to cash and wait for something for a bit. So that'll be my I have no idea what the heck the market's doing. I'm just totally lost. Let me just go to cash for a few days and weeks. If Caterpillar closes above the high of this candle sometime in the next few days or weeks, I would just be lummoxed, flabbergasted. Totally just no clue what wave, what's going on, no idea. Walmart, I don't know, guys. Walmart's going to, it looks weak short term. I mean, again, long term, it's Walmart, but hope for a bounce tomorrow. For anyone who's in bullish, I do hope it bounces for you. Depending on when you got triggered in. If you got triggered in right here on the 19th, that's 4 days into a swing trade. And if you move up your stop above the low of today, or even if you just slowly creep up that stop for anyone in Walmart, probably the best way to play it. I think Walmart slightly gets slugged lower. Just a little bit. You know, says, if there's a trade war with China, what's Walmart going to do? That's a great question. I mean, they're not going to roll back their prices too far. The thing with the whole tariff and China, I mean, macroeconomics, I could talk about that and think about that for a while. But it would be my guess that some of the companies that are going to get affected by this are actually ones that a lot of people wouldn't think about. I mean, e-commerce companies like Baidu, and Baidu's not really an e-commerce company, it's more of a technology company, but Baidu, Alibaba, Weibo, WeChat, Tencent Holdings, some of the other Chinese companies, I mean, yeah, they'll be affected short term, but they don't really, quote unquote, have anything to get tariffed on. Companies like Amazon, eBay, and Walmart could be the downside beneficiaries of some of the tariffs very short term. $60 billion is nothing. That's a small tariff, like 12% tariff. So I think the U.S. did $479 billion with China last year. So we're embarking a $60 billion tariff. Michael says, A Concise Guide to Macroeconomics by David A. Moss. Good book, easy read. On my list right now. I'm gonna screen capture that. I'm gonna put it on Audible in about 19 minutes. Thank you, Michael. Appreciate it. So yeah, I mean, anyway, guys, 60 billion is teeny tiny. To put it in perspective, Apple made 20% more than that in just the fourth quarter of last year. So Tim says he's really just throwing that out for a bargaining chip. I kind of feel that way. I mean, again, it's just my viewpoint. I'm not the best person at macroeconomics, but I don't think that tariff's going to be that bad. Long term, short term, it's going to impact a few people. And I think it's going to be some of these giants like Walmart, Amazon, eBay. LOXO, oncology. Oh boy, weekly charts, strong trend. Look for that pullback. I think it can go a little bit farther. It bounced off the 50 last time, so you'd probably want it there. If you're in, you probably have a stop at about 114.95. Here's the long-term moving averages. I mean, this is just a random, very volatile stock that is super trendy, meaning it's just trending higher. I'd probably, if it were me, and Jeremy, you get a lifetime supply of burritos if you take a trade on this one, I'd buy a little bit off the 50, which is 110, and I'd buy a little bit, a lot more at 95. If it gets down there, we will see. Next on the list is Intel, INTC, and Intel hung up pretty decently today. So Mr. Squiggles thought it was going to bounce off the 20, and it kind of did. I'll put the line in the sand. If you're going to go bearish on Intel, it's probably going to be right about there. So $50.20. So let me turn off the squigs really quick. So it held up pretty decently, down 1.4%. I would just wait to go bullish if it closed below this price. Bearish. End of day bearish. So if it closes below that, I would just simply be more cautiously hesitant to trade Intel and then maybe buy it off the 100 again. Micron having earnings. Post earnings beat secular trends and it's gapping down, of course. It's only gapping to 57, very tiny gap. Very small, 57.45. I'm gonna put it on my list tomorrow. I probably won't day trade that. It likely trades lower into like 55 or 56 and then gets bought up, is my guess. If it even makes it back down there, it could rally. We'll see. I'll leave it on the list for sure. But the daily chart, the trend is very strong. It is a retest gap. Yep, black candle gapping down. I got the $44 April put sale. I'll probably buy that back tomorrow or Monday, and then maybe end up selling another one for May if there's some good premium. But I was hoping for a gap up. We will see. The trend will probably just stay intact on Micron. It'll just hang out there and not really do very much. But interesting. It beats earnings. Spirit Airlines, here's some SAVE, getting wrecked. I don't have anything on Spirit other than just trade right to that long-term moving average, 100 and 200. Spirit is a wait. If you're trading Spirit Airlines, let it get back down to 31 or something before you do anything with that one. U.S. Steel getting shredded. Had a nasty gap down today. Just bearish gap and go, bearish gap and goes. Right there. Pennant pattern, white candle. Got a huge white candle here that a lot of people thought was a Morningstar reversal, and it was. It just didn't go higher. So, I mean, wrecked. So, U.S. Steel. The crazy part is I usually have something on U.S. Steel, but do you guys remember I got stopped out of it, right? I got stopped out of some bullish positions back here, and I haven't done anything with it since. As far as bullish is concerned. Bearish, here's the hourly time frame. Sandra says that's the name, pennant pattern. Ah, yep. So pennant is just a small triangle. Exactly. You got it. Just a small baby triangle. So here's the hourly chart on U.S. Steel. And again, since it gapped down on that day, had a nice white candle. It broke below, retesting into those moving averages. You're getting all kinds of gaps. But today, when it just gapped down again, nice looking trend. I mean, this was a pretty good move. And just to have pets June 15th at 34, are they okay? I mean, it's far away is the good news. June's very, very far. Here's the long-term moving averages. Let's see. I mean, you're going to go underwater on that one a little bit, but I think you have a contract, which again, if you got put some shares at 34, it really wouldn't be the worst thing in the world. With a gap like that, I would say just keep your eyes peeled for the next day or two, because you can always buy puts, right? If you have a put sale, you can always buy puts to protect yourself, to make money on the downside. So as U.S. Steel goes down, those puts will go up. After a gap like this, Angela, I do think that U.S. Steel is going to go a little bit lower, probably down to 30. Probably down to 30. It'll likely retest some the next 3 or 4 days. And then if it gaps again or starts rolling over again, just have some puts as a protection. Because again, if you got June, that's a long way away. Tons of things U.S. Steel can do from here, but I am flummoxed, that's the word of the day. That U.S. Steel closed above a resistance that strong on a monthly chart, and so far has done absolutely squat. But in the same instance, it did just trade right up to that same exact wick from last time, and that's where it wicked up and then just got wrecked. So if it happens again, maybe it does, maybe it doesn't. You got a nice little trend line here. Yep, I think she's coming to 29 on U.S. Steel. So if you trade U.S. Steel bearish, have fun. Let it retest and then make your magic. Netflix holding up pretty decently today. I mean, obviously it's a little gap down. Nice doji. Closed right on the 20. So we'll see if it bounces. Again, if you're a short-term trader, it almost hit our target. So 341, but if it doesn't hit there, if it doesn't bounce off the 20 tomorrow, we can have a little bit of fun trading some bears, guys. There's no reason not to. This is a flag pattern because it did gap, and it did retest, and then it gapped again today. So with that cute little support, the 20, again, I'm all for it bouncing off the 20. That's great. And if you bought today, fantastic. Phenomenal job just being rock solid in your strategies, buying off the 20. If it does not bounce tomorrow, Netflix is going on my list. And I think there's going to be a little bit of some fun, soft bears coming on Netflix for a bit, maybe just into the 50, right? The part that we cannot forget on Netflix, and I'm not making this up, back in October 2016, it was $100. Just a year and a half ago. It's gone 300% since then, 20% gain. That's pretty splendid. So a little bit of a pullback and a dip buying opportunity makes sense. Keep it on your list if you're just short-term bearish. I mean, if we're looking at the hourly, I don't know. I mean, a break below 305.70. Ooh, here's the long terms on the hourly. Yeah, I think we're going to go to at least 300, which is 6 points. Again, if you're trading bearish, just be quick about it. I'm not saying the market's going to free fall, but you can see some quick candle signals, get in, get out. I think 300 stop 1 and then 280. And then from there, I'll be more bullish again on Netflix at the 50. Okay, next at that point, HubSpot, ticker symbol HUBS. So HubSpot holding up decently well today. High wave candle, a little bit of a bearish candle today, not doing all that much. So HubSpot, just high waves, both today and yesterday. But trend still bullish. The close below 113.45, and you probably get down to the 50. HGV. Hilton Grand Vacations. I was looking at this thing to bounce off the 50. Is this a tweezer top? Almost. Hilton Grand Vacations. I think she's coming to that one hundo. 42.66. Again, looks a little on the bearish side. Just a smidge. Smidgioso. All right. Wi-Fi. Boeing Go Wireless, which I'm blown away. These guys do as well as they do as far as the stock price. I mean, I'm literally flummoxed. It's a fun word. It is shocking how well the stock is doing because they're not that great, but they're really just attacking airports, airplanes, anything that they can get their hands on as far as just IT, internet services that are pretty mobile. I say bad things about them. I mean, I've just never been blown away by the product. I'm in airports a lot. But if we take out the low of that candle, again, this does on this particular stock, just looking at the candles, looks a little double top-ish. It gapped down. It retested. I think this one's about to have a little bit of a baby crash. A little bit of a baby crash on Wi-Fi. Exponential moving averages down to the 50. It might just make it to the 50, and that'll be that. But I'm going to put that on my list tomorrow as well. Brian says it's common on military bases too. Noted. Okay. So I don't really go to military bases that enough because I'm, what's the term? Weak, scared, fragile. But makes sense. I can dig that. All right. Next on the list is Activision Blizzard, ATVI. So if you tried it off the 50, good job. Robert Falco got stopped out this morning. My analysis on it was if it was going to close above or close below. It closed right on that little bearish trigger on Activision at 69.70. So again, if you tried off the 50, good try. That's a pretty decent gap. If you're looking for anything to continue bearish tomorrow, the ones that likely will are the ones that have a white candle today and are gapping down. I'm sorry, white candle yesterday and are gapping down today. If the market continues lower tomorrow, those will probably be the ones you want to play for my day traders. I think day traders, you can have a lot of fun tomorrow. Again, if you're long-term, don't let the short-term stuff scare you because we could just flush lower on Activision into 66 or 65, bounce, and then, by the end of June, we're at 80. I mean, who knows? All of those things are possible. So just, again, if you like the stock, love the company, that's what matters the most. DQ, is that Dairy Queen? No. Energy company. It's an ADR, American Depository Receipt. Traded to a support. Trying to bounce. I have no idea what this company does. But they've been up here before. Wow. This is the weekly chart. They've been around. It had a previous all-time high resistance area here at about $70. So again, if you're playing DQ here on the daily chart, it looks a little more on the bullish side, and the last two days have been pretty solid. So let it keep trading sideways. If you bought around 44, congratulations, keep holding. And yeah, if you can get above that 100, it should just slowly start filling this gap some. I'm going to put these two on the list really quick, and then I'll be done. Sorry about going long. All right, AOBC, American Outdoor Brands. it's going to be an ugly, very slow trade, but we've been planning this one. We set this one up 4 days ago. So I have to take that trade, unfortunately. It did everything I asked it to do. I've asked it like 4 different occasions what I needed to do, and it's done every one of those. So it's like, all right, well, doesn't mean it's going to work, but that's part of the following the plan. If you say, okay, this is what I want it to do, and it does it exactly, then set it up. All a little bit bearish. And market is a great trade based on a gap and go. Open because it's not triggered yet. And there we go. On AOBC. And again, we're going to be quick about these trades. If we need to exit, we will. Nike, so NKE is gapping up. Shredded. Get wrecked. There you go. Good gap on Nike. Man, that thing could fly to the moon tomorrow. That's a good gap, guys. That's a really good gap. I'm going to watch it closely tomorrow. I'll see if I can trade it. Maybe we can find something. Maybe we'll have one bull, one bear. But that's a great gap. I mean, if you're long-term on Nike, which this is one of the stocks back in January I mentioned I like the most this year. It opens above 67.50. Now, that's the key. Is it going to be able to hold this? Because, yes, this was earnings. If it holds that gap, that's a solid gap. That might even help the S&P tomorrow. We'll see. Nice move on Nike. Okay, AAXN. AAXN, Aerospace Defense. This is one that doesn't care about what the market's doing in the slightest. Really good bullish gap and go on February 28th. Nice pullback. This is the one that we're going to keep our eyes on as well. And more or less just come back to it and see if we can find a good trade at some level. So we'll see. I'm going to keep this on our list. I like the trend. Looks nice. And we're going to kind of continue from there. TCEHY, Tencent Holdings. This one had a gnarly gap down. I love the gap. So their earnings were great overall. So I had a limit buy to get in at the 100 simple moving average, which is 54. So I was talking about this one, what, just 2-3 days ago? Limit buy right here. So that filled this morning. This is a good opportunity to pick up some of this. I just like the stock, like the company, did a lot of research on it the last few days. I'm going to buy a little bit more at 50. I'm going to buy a little bit more at 48. This is a longer term hold for me, so I'm just going to slowly start tiptoeing into the stock, seeing what she can do. It gaps all the time, so it's a position that I'd be okay to hold for a year or two and just see what she ends up doing. The lower it pulls back, kind of the better, but it looks a little double topish on the weekly. I get that. All I'm saying is I like what it does, and I'm going to look to kind of add in as we go a little bit lower. So we pull back to the 50. I'll be a buyer. They don't have covered calls, doesn't have protective puts. It gaps all the time. So just keep in mind, this is not something that I'm betting the farm on. Justin J and Bob and Jesse, we all have pretty much similar trading plans. Buy about 50, buy about 50, buy about 100, so you get 200 shares worth. And that's really not a massive investment. So that's just my thoughts on Tencent Holdings. And BZUN, another one I talked a lot about. It was a great, solid pullback today. Just everyone getting trapped. Figured that was going to happen. This is a retest gap. We could be so lucky if it pulls back to 36. But this $35 made put sale has $1.11 down in there. So if you did sell your BZUN or you want to buy some, you could consider some puts down at 35. And of course, if you don't want to own any and you want to just, if you want to own less than 100 shares, you can just kind of get your setup, because really what I'm looking at is buying some at 39.67 and buying some at 35, and that's why I got that put sale down there. If that happens, great. So I'll be making that official for anyone who wants to sometime tomorrow. And I think that's about it. So a lot of stuff to talk about today, I know. New swing. So, folks, tomorrow, let's find out what happens. And sorry, one final update I didn't get a chance to look at. Yeah, we're just going to go a little bit long today. It's okay. Morgan Stanley. I did get stopped out of Morgan Stanley today. We got out of JP Morgan the other day. Got stopped out of Morgan Stanley. Let me just go through my day really quick because I want all of you to know. Don't be vulnerable. Type in a 3 if you are feeling a little shitty at the early morning of the day. If you're like, this is, things aren't that great. Okay, so there's some other 3s. So if you weren't feeling that great this morning, I was in the exact same boat. Okay, here's what I ended up doing because you got to have that flex. Got to be a little bit flex. So it's like, don't stress too much about it. It's just trading. It's just money. Go be happy. Go enjoy life. There's millions of opportunities. There's so many other incredible things you can focus your attention on rather than just money and losing it and making it. So just always think about that, right? It's just money. Literally numbers on the screen. Have an absolute blast. Be the happiest person in the world. I've heard that Jesus Christ and Mahatma Gandhi and Mother Teresa weren't very rich people, right? So it's just whatever it is that you want to do. Just have a good, be an amazing person. Anyway, on that side note, Morgan Stanley getting stopped out, and the SPY got stopped out right at the early morning, and I was like, "Woo, okay." So what I ended up doing is this was the first trade that I didn't even bring myself to know what the heck to trade, so I just traded what Blake put officially in the morning room. So within like 4 minutes of the open, I had lost 2.5 Rs. So I was like, okay. I got a half an hour left before I just have to turn everything off. I was like, here's what I got to do. I got to go find a trade where I can probably lose less than an entire R. So Blake posted this entry. Well, it wasn't this one exactly. It was very close to this one, but this entry with this stop. I was like, yeah, I feel like I could lose less than an R on that trade. I was like, trade, if it works, I move my stop to here, then move my stop to here. Worst case scenario, I think I can lose half an R. So I'm going to take that trade. Well, I got skipped. That didn't feel good because I saw that candle and I started getting FOMO and I was all worried. And then I was like, okay, no worries. I'm going to set my entry here and then I'm going to set a stop there. And I posted Slack. I was like, man, that risk reward kind of blows. I was like, maybe I get a full R, but I think I can lose less than half an R because in the early morning, realistically, I was thinking best case scenario, I was going to end up being down 1.5 Rs on the day. I was like, if I make an R on this trade, it's probably the only thing I'll do. So as you can see, this candle comes in right there, and I missed the entry by 40 cents, and then it rolls. And I remember, these candles weren't here yet, so I didn't see what happened. But when that candle came in, I felt like a real Sherlock Holmes, a true Einstein. I was like, man, missing out on these trades, everyone's making all this money. So if you guys want to know, yeah, I feel the same stuff you guys feel. I'm not a robot. But what ended up occurring is then I had a podcast to go do. But I was doing it from my house. It's the IR4 podcast, which you guys will be launching in about 2 hours. And I came back. I was still doing it. It was on my computer. I just had my charts and my broker open. I saw this candle and I saw this candle. I was like, oh, this is a really good setup. So I set up a new entry here because it was at that time that candle had come in. And then I set up a stop where I felt like I could lose less than an R. So I put my stop right about there, just a little bit above that purple line. So got triggered in, and I thought about exiting some at the low of the day at an R. But again, I was kind of a little distracted in a good way from the podcast. And so when that candle started breaking through, I didn't really worry about it, and it just hit my 2R target right there. So I got 2 Rs on ABBV, which made me sleep a little bit better at night. So I felt really good because I was like, okay, I'm only down half an R. But I was like, that's a phenomenal trade. Just absolutely perfect. Guys, that's 2 Rs right here. Classic bullish candle, stop above those wicks, just phenomenal rollover. Very nice. A skydiving gorilla could have taken that trade. Now, Google, I left this trade open because this was funny. This was hilarious. So Google, first of all, look at this daily gap. What? So you had a high wave candle, another bullish high wave candle. So that's 2 days of indecision. 2 days where people go, I have no idea what's going on. And then it just opens right below the low of those two candles, a bearish gap and go. I got a bull put spread down here, so I know I'm like, oh, I'm feeling this a little bit. So I'm thinking to myself, this is an amazing gap. I was like, I'm going to play Google. So on the 5-minute chart, this was at some point right before or after I was playing ABBV, it broke the pre-market low. Not pre-market low, I'm sorry, low of the day. So you had a lower shadow, and that candle closed. I said, oh yeah. I said that out loud too. Oh yeah, I'm ready. So Google retested the low of these two wicks. That's all I did was just set my entry at the low of those candles, 1071.95. I left my exact setup on here. The high of this candle was 1071.85. Meaning I missed it by a dime on a $1,000 stock. And then I saw that happen. And I felt like a real, just a real ham. And then, obviously, I didn't leave this trade open, but I should have. That's one of those, I never do that, but shoulda, coulda moments. Had I just left the exact trade open, it would have triggered just marvelously and rolled over for the day. So bottom line, I did miss out on this Google trade. And then I played Apple. So AAPL, I play Apple almost every day. So here's the Apple gap, black candle gapping down. I know a lot of people bought at the 100. I was one of them. Again, just feeling like a tuna fish out of water. Like, when the heck is this going to stop? When am I going to stop losing? I don't know. You had this white candle gapping up. So that's a retest gap. It's like, okay, we're probably going to come fill that gap. Here's the 5-minute trade on Apple. Let me just hide all his drawings for a second. And there was no pre-market support, nothing holding this up. You had a lower shadow here. The first 5-minute candle had a gnarly lower shadow. So my initial setup was really the exact one that you see now, 169.33 by 170.42, which was just above the high of the day. And I adjusted that at some point after this candle came in. So it was in gray because that was my old stop. So anyway, I was just pretty much looking for a low of the day break is what was happening. Just nothing special. Low of the day, support breaking out. Right about here, so this purple arrow shows where I exited the trade. And so Luke was actually asking me about it because I know that when he's my Belgian buddy, he got triggered into some bullish positions yesterday, I believe, on Apple. So let me just kind of scroll this up here for a second. I'm just giving you a diary of my day. It's not exciting, but this was part of it. So 1043, so I was posting my day trade right here. So I mentioned I lowered my stop on Apple. So here's my stop lower. So I put it at 170.01, right above those highs. And at this point, I had made like an entire $29 or something. It was very, very minimal. I was like, okay, nothing exciting happening there. So when he was asking me what my target was, I say for the day trade, I was like, I'm going to be exiting this trade at break even. I'll be exiting this trade now at break even to reevaluate. SPY is about to be finished dropping, taking the small gain on the bearish day trade, figure out going forward, plan to short on a pullback. That was my plan. So I exited right there at the purple entry, and then it just absolutely cranked out. Now, should I have bought some calls at some point? I should have, but that really wasn't my plan. My plan was, as I mentioned, to short a pullback. So anyway, that was Apple. Move that there. And this did trade into the 100 simple right here as a resistance, and that would have been the short right there, the tweezer top, breaking that bullish candle, making a new low, coming up tweezer top, rollover. So that would have been the bearish move on Apple, coming right back down to support. But I still wasn't done yet because I had taken that trade. And then I also took Darden, DRI. And here's what Darden, this was this gap on the daily, is just how do you not trade this, or at least try it? I don't know. So here's the 5-minute chart on Darden. And this was a busy morning. I was doing this. I was day trading while I was podcasting, true story. Had this support right there on Darden. Very nice white candle. I was texting a coaching student of mine. I was like, who was playing Darden. I was like, get in below the low of that big giant white candle. You had this pre-market low right here, pre-market support, and that was the play on Darden. Nice little breakdown, getting in below the low of this white candle. Retested the low right here, and I got trailed out right about there for about 0.8 R. So I made 2 R's, 2 R's on ABBV. Joseph said he made 4 R's. Congratulations, Joseph. That's amazing. Great job, man. Made 0.7 R's on Apple. I made 0.78 R's on Darden, DRI. And then I lost 2 R's on the stupid SPY calls. And then I lost 0.5 R's on Morgan Stanley. So that was my day. So total, after the craziest, one of the most wild days I've been in a while, 0.3 R's to show for it. Give or take. After all those commissions and everything, right about 0.3. So, not that much. But anyway, a lot of work for 0.3. I love doing it. I love trading. If you love trading, folks, keep trading. Do it smartly. Lose less money than you win. Don't get stressed out about it. Think futures. Think good thoughts. I'll send you other videos as well in a few moments later this afternoon. Another video that I did, just a quick snippet of the morning room. I was kind of talking through some of this stuff. Folks, you guys are amazing. Jill says you're a legend any way you spin it. I don't know. I think I'm surrounded by legends, but I just want to say thanks, folks, for helping us enrich lives. Thank you for trading with me. Thanks for learning with me. Thanks for growing with me. We're going to continue to grow. We're going to continue to get better. And all you can do is better your best. Let's better your best, folks. I'm going to go hang out with a trader in an hour. Meet a guy I've never met before who lives like 3 miles down the road from me who wants to learn how to trade. And it's going to be amazing. Folks, I love you. I really do. Thanks for being here. Until next time, love, life, live, life, trade. Bye.